Hey there, it's Mike Wise with CMG Home Loans and your weekly mortgage update. So there was not a lot that was happening this week in the way of economic news, but interest rates, they pretty much went sideways this week and up just slightly. But let's look at some of the details and see how it was effective. So Fed members, they are talking. This is important because this is the people that are going to tell us when they're going to lower or raise interest rates, right? And so there was about 4 people that were out there this week in the news that were making news. Austin Goolsbee, dovish, wanting to cut rates. Basically, he's like, we're at historic levels of restrictiveness, and we only should do that if the economy is overheating, and he doesn't believe that we are at this point in time. He's of the opinion that the economy is cooling off, the unemployment numbers are going up, the consumer delinquencies are going up, and slower spending and slower saving as well. So he's wanting to cut rates. Mary Daly, she's wanting to cut rates. She's a little bit on the long-term side of things here, not quite as aggressive as Austin Goolsbee, but basically inflation is not the only risk that we have. We have all these other things like the rising unemployment, and we need to avoid further weakness. So she says we're at a risk of going into a recession, and so rates are coming down, but she's more further down the road than Austin Goolsbee is at this point in time. Lisa Cook, she's in favor of a rate cut. Basically, they've made improvements on inflation. The labor market is cooling, same thing here, and they need to reduce the restrictive level that they're at to kind of maintain the economy, that balance, that healthy balance that they're trying to get at right there. The only person, Bowman, they're willing to raise rates. They came out and basically said, look, we're still going to be restrictive. We want to make sure that this is that this inflation is gone. If it reverses or it starts to go up at all, I am willing to raise interest rates, raise the Fed funds rate. So a lot of different talk out there that's going on. Case-Shiller, this is housing. This whole page is about housing. And Case-Shiller, they came out, house prices, the gains continue. So April, the home prices were up 0.3%, which is an all-time high. And prices are now up 6.3% year over year. So that big numbers, housing, good investment over the last, a long time, but continued prices going up. And I'll get to the new home sales in just a minute. But FHFA, they manage Fannie and Freddie. So this is the house pricing index that they have is looking just at conforming loans. So in April, the home sales were up 0.2%, and again, 6.3% year over year. So very, very strong housing numbers here. New home sales, signed contracts were down, so they're starting to slow down a little bit. The home builders, they're starting to get a little nervous. They're actually slowing down the buildings. The permits, as I reported last week, are basically slowing down as well. And so we're still 2 to 3 million housing units short in the United States. That is what's keeping the home prices higher here, because there's so much demand and there's not enough supply. And so when you have that imbalance, the prices go up. So the new home sales, the thing here is that there's only 1.92 months supply of housing here. So it's very, very, very low. Again, keeping prices higher in all areas of the country. So today, Friday, housing, the personal consumption expenditures came out. This measures inflation. This is one of the Fed's favorite numbers of inflation. And good news here. So the headline number went from basically 2.7% down to 2.5 or 2.6%. So just a 0.01% gain there, which was good news. But the core number, what they're looking at, the media, they reported 2.8% is what they were at, and now they're down to 2.6%. So really it's a strong number as far as the media is going to be reporting it. It went down 0.08%. So good numbers there. The thing that's still keeping it high is the shelter cost. The shelter cost is housing, right? And so it is improving, but it's a slow roll because it's got a 12-month moving average basically that kind of that goes down. So we're looking at 12 months of data. So you got to get to January to where we start to see some significant difference on the shelter cost, which is where I think we might see some inflation numbers come down a little bit because of this. It's such a big piece of the PCE. It's like 40% of the PCE. So rents, they went down slightly, but and owner's equivalent rent, I hate that reading that they have, but it is what it is. It's owner's equivalent rent. They basically call 50, 100 people up and say, what would you rent your house out for? And so that's how they get that number, and that was down slightly as well. So both of them, all of these things it's good news, but it's a slow roll on the PCE, especially when it comes to the housing. Personal savings rates, they came out and down here. They're down, way down from, this is the pandemic. When we went into the pandemic, stimulus 1, 2, and 3 is when the savings rates went up, and the personal, it's at 3.9%. So it's a very, very low number, back to actually below where we were pre-pandemic at this point in time. So the savings rates are going down. Personal spending up 0.2% in May and 0.1% in April. So personal spending is slowing down as well. So all these things are affecting the economy and showing us that the economy is slowing down. The consumer is slowing as well. So how did this impact the treasuries and the rates? So remember, higher prices mean lower interest rates. Higher yields mean lower prices on the treasuries. So on the treasuries here, again, we're trading in this range. There's the resistance and a support level here. We're right in this range, and that it continues to be in that range. But we'll see what happens here. I think that we'll see some lower numbers. We'll probably trend towards the upper part of this range next week. But we're not moving out of this. The yield actually went up just slightly. We went over 4.3% on Wednesday and Thursday of this week, and then it's dipped below that. This morning, we're at 4.27% on the yield. So last week we were at 4.23%, I think, on the yield. So it's up slightly, which is affecting the mortgage rates, and you can see how it's affecting the mortgage rates. Basically, we're at 7.05% on a 30-year fixed rate mortgage. That's up from 7.02% last week and 6.99% the week before. So we've trended up. I put rates are flat here, which we are flat, but I put the arrow slightly up here because that is we went up a little bit on mortgage rates here. So from week over week. And so that's where we're at today. Wanted to tell you just one more thing here. Again, I told you this last week, but we have a physician program, doctor program. And this is for doctors, medical doctors, DOs, doctors of like surgeons, general dentists, pediatric medicine, a veterinarian, optometry, psychology, and PAs are available. We do not have it for nurses just yet. But that is actually, we're working on that, and that is coming. So this is 5% down up to $1.5 million. We do go up to $2 million loans. You have to have 10% down for that. But this is for doctors that are putting less than 20% down, no mortgage insurance on these loans. And it's a great program for the doctors. So looking forward to that. That's it for today. Hope you have a great 4th of July next week. We will be closed on, I think that's Thursday, and we'll be available the rest of the week. So hope to hear from you. If you have any questions whatsoever, please feel free to text me And I will see you next week. Talk to you soon. Bye-bye.